Hello everybody, it is the 12th of April 2011 and welcome to today's silver log. And today we're going to take a look at the silver market, but we'll start off within some significant Fibonacci levels. On Fibonacci retracement, the way that I've figured out a simple way to calculate Fibonacci is you take a high from a previous range and you divide it by a low. Take that difference to the power of the Fibonacci percentage that you want, so 38.2, 61.8, 23.6, 50%, whatever it is, and multiply it by the low. And these are the figures that we have. Most likely this one, as you watch it, is probably no longer valid, because as I'm recording this, it's coming very close to taking down this level and thus making new lows. And within the trend, the only one that is broken is the short term. As long as we're above this level here, we're bullish. So we're bullish intermediate, we're bullish midterm, we're bullish long term. We are not bullish short term. We are bearish on the short term. And I think the significant one will be the one from this 2630 break, or from the low of 2630 that occurred after the only significant retracement thus far during the bull market. Therefore, the significant level, $35.11. If we have any sort of retracement, this is the level I'm expecting it to go. $35.11. Also, when you have the highs the exact same on every single level, you are in a spectacular bull market. Same, and well, these highs are a little bit different. They go back to 1980. So I guess it's not as spectacular as it could be, I guess. But when I was stating on the blog, it's really not fair. No, for the long term, it's not. And I say that because it's just too easy to make new highs every now and again based on inflation, especially over 30 years. So that's why we haven't made new highs. Yeah, I guess that tells us one of two things on a technical level. Either the first one is that over the last 30 years, there has been a lot to destroy the supply versus demand. Thus, we've had much lower prices. This is a combination of the demand dwindling and the supply just getting blown away to the upside. Well, if you don't believe that to be the case, then maybe it's just a little bit of manipulation. We'll wait and see. As we now move on to the market, this is a daily time frame. And yesterday, some people were panicking on a day. People were panicking on a day where we made the highest low point and the highest high point since 1980. We have never had a period where we closed this high on the low. When you compare it to all of these other low points, and yet some people still complaining. It might be a reversal. It's tough to say yet, but there's been many different corrections along the way. And maybe we come back down to that 35.11 area that I've been mentioning earlier in this video. It's possible, but that doesn't stop the trend by any means in the long-term time frame. There's bound to be many dips along the way. That just goes with the territory. As far as some trend lines are concerned, this trend line has been doing really well because after you break it, you continue trading at the same rate of ascent that you did before, and thus the bull market has been continuing very well. And now we're going to switch this up to the hourly chart. And the more time support is tested, the more likely it's taken out. So this is the third 5-day test. This is the third test of this support level. The 5-day obviously it went below it as of the recording of this video. It's 10:15 a.m. as I'm saying this. Just because we're pierced below it doesn't mean that it's heading lower. But where do you think we're going if we break below the support line? Right here, around $38 and approximately 80 cents as the next significant support level. The pattern is a bearish one, where you have a situation where you make this peak high and low, and then you make a lower high and you're back to this level. It's almost like an inverted cup and handle formation. Cup and handle regularly is bullish, therefore the inverted one would be bearish. If we look back at that Fibonacci on the short term, the significant level was $40.60. It tried to get above it on a couple of occasions, was not able to. So I would like the chances that we do come and test this area. That seems to be the more probable one. Yes, we are. All sell-offs are guilty until proven innocent. But I also come from the same school of thought. The more often support is tested, the more likely it's to be taken out. And if this happens, is this going to destroy the long-term trend for the markets? That's the confirmation for going to 50 still there. The currency being fiat, well, it's still a fiat currency. But the volatility is increasing. This is the chart that I've been showing for the last little while. Back to this level, so I was stating no reason to call an intermediate term top until this explodes. Well, it's starting to explode. Nothing out of the ordinary, just regular high volatility. We have yet to enter the mass state of extraordinary movements. And I think that's a good thing. I think that's a really, really good thing, because when you start to see massive volatility, that's when you can start to say maybe we're having a major top. But it doesn't look to me as if that's the case. And if you're looking at the futures contract, the person making a wager for SLV to go below $25 an ounce, maybe they may know something, maybe they don't. Maybe they're planning on selling it in 5 days when the price that they bought it for triples or quadruples. It's a very complicated issue, the whole options thing. And therefore, is it complicated knowing what debt does? Is it complicated in knowing the tangible value that silver has on a physical intrinsic level? It's not so much, but I guess it all depends on the person also. Thank you for watching, and have yourself a great day. Bye-bye.